Hey, what's up? This is Greg and welcome to DLA Markets. So it was quite an amazing week in the markets, and in this video I'm going to talk about the market action, some of the data that came in on the inflation front, how that's going to affect the market, and I'm also going to talk at the end of this about the AI craze, which is currently sweeping the ocean. No, not the ocean. Currently sweeping the market, let's say. Okay, it was quite a week. We had the Dow on Friday going up 700 points, and all of the indices were going up. Recently, we basically had a melt up in the largest NASDAQ stocks, the high-tech growth stocks. And so it's leading a lot of people to starting to get, very bullish, starting to feel like, the Fed's going to pause and, oh, this is great. We're in a bull market now and everything is just wonderful. And, people can't wait to be making, 30-40% on their portfolios again. But there's one problem with this. The data in the economy is not cooperating with the Fed. In other words, the data is fighting the Fed. Okay, the headline numbers coming down, as we've talked about on this channel a lot, but when you look at the individual components, the Fed, over 500 basis points of increases in the Fed funds rate has not affected certain areas of the economy. And in fact, from an inflation standpoint, they're actually going up. Okay, so what are these factors? Okay, first of all, jobs. The jobs report came in. The economy created 339,000 jobs last month. Okay, this is a stupendous sum of jobs at this point in the cycle. The consensus was 195,000. So the consensus was 195,000. It produced 339,000 jobs. This is, if you're a Fed governor, this is like craziness, okay? The employment sector of this economy is still extremely strong. Now that was slightly offset by the fact that the unemployment rate went up to 3.7% when it was expected to go up to 3.5%, okay? So that created a lot of bullish sentiment in the market. And the reason for that is because people think that the probability just went up because there's now weakness in the unemployment number. The probability just went up that the Fed's going to stand pat at the June meeting. Okay, stand pat, in other words, not raise interest rates and just wait and see how things settle out. Okay, so that led to a lot of the bullishness on Friday. But last week, the PCE number, which is a measurement of consumer expenditures, it rose. It rose from 4.2% to 4.4% annually. It was up on the month 0.4%. So this says that inflation is rising. So with all these interest rate increases, there's 500 basis points of Fed funds increases and increases interest rates across the economy, people are still spending like crazy, like it's going out of style. Okay, this puts upward pressure on prices, and so even though it looked like the CPI number, which I call the headline number, was coming down, people are still spending like crazy, putting upward pressure on inflation. This is bad from the Fed's standpoint because all this rate raising is really not doing anything. Okay, so the areas that are still showing extreme strength, and I said this on the last video, is number one, employment. Employment is just like completely crazy, all right? Which is in itself inflationary, okay? Even though real incomes are going down with inflation, the labor market is still extremely tight, okay? And leisure and hospitality in particular are still extremely hot, okay? And these two things are a large component of the economy and a large component of the inflation picture. Now, the consensus that's developed in the market, as I'm sure you've realized, is that people are thinking that come the June meeting, the Fed's going to basically stand pat and not raise interest rates. And in fact, many of the Fed governors, and including Powell, he's kind of indicated that, you know, maybe we'll stay pat in July and then maybe raise further in the summer. Now, this to me, in light of this recent data, makes absolutely no sense. Because if you're planning on staying pat for 1 month and then planning on raising later in the summer, why don't you just raise now and get it over with? You know, this incrementalism is just killing us here, okay? And, you know, it's been clear to me, and I've said this a million times on the channel, the Fed has absolutely no credibility in the market, okay? After the inflation is transitory phase, nobody believes anything the Fed says. The Fed has no credibility. No one's afraid of the Fed, right? So this bullishness continues at the slightest glimmer of hope, the slightest indication that the Fed might pause, causes this speculation in the market. And, you know, I would call it rampant speculation. If you look at what's been going on in, I'll call it the Qs. I mean by that the QQQs, which is really like 7 stocks, okay? It's like the 7 largest technology stocks. Now, if you've watched my videos for any period of time, you will know that for like a year, I've been bearish on the market, and I've been saying I continue to be in energy and basically large cap growth stocks, which are primarily the Googles, the Apples, the Microsofts. I was not in NVIDIA, but we'll talk about that later in the video. But the only areas I've been bullish on were those high-tech growth stocks, and that has really played out year to date. These larger stocks, the QQQ's up around 30%, and Google's up 29% from when I recommended it, and you can check that out. I'll put that at in the description. I recommended Google around the time when it split. It was selling for a little over 20 times earnings. It was absolutely dirt cheap. Nobody wanted it. I recommended it. Now it's up 30%. It took a while. It went up and down and up and down. I thought I might be wrong for a while, but I think I've been vindicated now. But again, I see 3 prongs to the strategy right now: cash, high-tech growth stocks, and energy. Okay, Exxon, which is my largest holding, it's up on the year. It's hung in above 100. It's gone as high as a 109. It's come down a little bit, but I'm loving the dividend. At my cost basis, I'm getting over 8% on the dividend. The current dividend, I don't know, is around 3.5. But I also love cash. I love cash. Short end of the Treasury curve, over 5%. Sign me up. That's the greatest trade in the market right now. Because I think what's going to happen is these tech stocks are now very extended. Reality is going to set in as more economic news comes out, and as the Fed realizes that they are still very behind the curve. Okay? And if you look at this chart, you can see that historically, the Fed funds rate has had to be significantly above the core inflation rate in order for inflation to come down. Right now, we're about at parity. Okay? So what that says to me is Fed funds rate has got to be 6% or higher. Okay? So that indicates multiple rate hikes from here. Okay? And so I think this idea of pausing and then raising later in the summer, this is nonsense talk. I don't know why they talk like this, but I guess they're, I don't know, afraid of spooking the market. I don't know, but they're certainly not, they don't appear, when they say stuff like that, serious about cutting inflation and getting inflation down to the 2% target. All right? So if you're a bull, I would be very careful in here because, you could get the 1-2 punch, and if you're extremely long certain names in the market, you could be in for a disappointment. And remember, this rally has not been broad, okay? The S&P's up like 12%. So the broader market is not up anywhere near the 30% that the narrow QQQ is up. It's only like 7 stocks. If you look at most stocks and most sectors, they're still flat to down, okay? So keep that in mind. Now, another thing I want to talk about is this AI craze, right? Okay? NVIDIA and everything else that has AI in front of it, okay? Now, I'm planning on doing a lot more research on the AI subject, and I'm hoping to come forth with some content on this channel on what I see as the best way to invest in AI. So let me say at the outset, I'm not discounting AI, okay? I think AI is an incredible innovation that will continue to benefit industry, and there will be ways to make money in AI. But preliminarily, and what's happened in NVIDIA smacks to me a lot of all the other manias we've seen. You think of the dot-com bubble in the early 2000s. You think of electricity. You think of fire. You think of, sorry, I had to say that. But you think of all the innovations that have come forward, and the dot-com era is a good example of it. Anything with dot-com after it, went up to a zillion times earnings only to crash. Just be careful. You have to do a lot of research to figure out, A, how people make money in AI, and B, what is going to be the way to get into it. And I'm going to be doing some content on this channel, and I'm working on a video right now about the whole NVIDIA thing. So that'll be coming out soon. But this kind of mania often attracts retail investors and people that basically don't know what they're doing, that come in and buy anything with AI in front of it. Google, Microsoft, a lot of the major companies are all getting into it. They all have programs where they're developing it. Some are ahead, some are behind. It's going to take a while to develop. There will be ways to make money on it, but like with anything else, you have to do your homework. Okay, that's one thing that I always try and put forth and try to get everybody to understand. In investing, you have to do your homework, and there's no substitution for that. Okay, so at this point, I'd like you to stay tuned to this channel. I will be coming out with a video on NVIDIA, and we will be talking more about AI on this channel and how you could possibly get involved. And as far as the NVIDIA thing is, I'm really going to take a deep dive into it and figure out, is it real or is it hype? And is that dramatic rise in NVIDIA after the CEO predicted $11 billion in sales, is this hype, or is it real, or is it a sucker's play? Okay, so stay tuned for that. If you got value out of this, please like and subscribe. And at this point, I'd appreciate it if you would take a look at this video, this one right here, which is going to have more information in it on this and related subjects. Thanks for watching, and I'll see you on the next video.